Well, hello, everyone. Once again, thank you for joining us this afternoon at this webinar, Enable Greater Business Agility with Flexible Wage System. My name is James Pang from TAFEP, your MC for today. Now, should you encounter any technical difficulties during this webinar, now do contact my colleague, Linda. Her number and email are shown on this slide. Now, please note that this webinar session will be recorded, and not to worry about getting a copy of the slides, because we will be sending you a copy of the slides to you shortly after this webinar. And if you have any questions, now if you look at the bottom of your screen, you do have a Q&A button. Now just click on the button, raise your question, and type in your questions, and we will collate all questions received to be addressed during or after the webinar. Well, let's begin. Right, over the past 2 years, we have seen the impact the pandemic has had on many businesses and jobs. Now, this has underscored the need for business resilience and wage flexibility. Now, as we navigate our way through recovery, employers should consider adopting the flexible wage system, or FWS in short. This was recommended by the National Wages Council, NWC. Now, the FWS is a nimble and competitive system that helps companies respond quickly to changing business situations. Now, in this webinar, our speakers from 8lisk HR Consultancy Private Limited and Raffles Hotel Singapore will share how including FWS into your compensation system can help you react during a downturn to better manage your costs, increase job security for employees, and reward them according to business performance. Now, before I invite the first speaker, I would like to share an animated video which discusses some myths that employees may have on FWS and how a company deals with these myths. Now, let's take a look.
Welcome, everyone, to the Cyberlicious Town Hall. It's been a challenging year for us, and we are extremely grateful for your continued hard work and commitment. I know there have been whispers about retrenchments and the company closing down, so I'm here today to let you know they are untrue. The downturn hit us hard, but we survived. We've learned that we have to be more resilient and nimble to face future challenges. Hence, we have decided to adopt the Flexible Wage System, or FWS. This is a flexible and variable wage system that allows us to reward employees when the business does well, and also adjust wages during challenging times. I know you may have concerns, but please don't worry. I'm here to address your questions.
Does this mean you can adjust our salary the way you want it anytime, anyhow? I have children. I need a stable income.
Rest assured that we will not reduce salaries randomly. For our wages to be agile and sustainable, there will be both fixed and variable components in our salary. The components will be adjusted when certain performance indicators are triggered. The variable portion will be made up of two parts: the monthly variable component, MVC, and the annual variable component, AVC. The MVC is a part of our basic monthly wage, which may be adjusted when business conditions are very poor. But in normal times, this basic monthly wage will remain unchanged. The AVC is what we commonly know as bonuses, typically paid at the end of the year. Under the FWS, the amount of bonuses to be paid will depend on how well we do as a company. I see. But is there a chance that our wages will be cut quickly and restored slowly, or never restored? Cyberlicious is a unionized company. We will work together with our union to agree on when to trigger wage cuts and when to restore wages. This will depend on the company's performance and market situation. Please don't worry. Small steps will be taken in implementing such wage adjustments to minimize disruption to you and the company. And as these FWS adjustments are tied to a fixed set of parameters, wage adjustments will be done in a controlled, systematic, and transparent manner.
But how can I plan my finances if you cut our wages without informing us?
Cyberlicious will not make any adjustments to your wages without prior notice. We will discuss the terms and conditions of implementing the FWS with the union. We will also work closely with HR to engage you further to hear your concerns. After which, consultation sessions will be conducted with the union and department representatives to address the key issues raised. Once an agreement has been reached, we will communicate it through formal announcements like this town hall. Our corporate and employee handbooks will be updated with the agreed terms, and all changes will also be captured in the collective agreement. We will ensure that everyone understands the impact of implementing FWS. Moving forward, I urge everyone to work together to make implementing the FWS a success. The FWS is an important tool to leverage on so that we can be more nimble and save jobs. Meanwhile, let's innovate, look for new opportunities, and improve our productivity. As our revenue and profits increase, everyone will benefit from more bonuses under the flexible wage system. I hope this town hall has been helpful, and my door is always open if you have more questions. Thank you, everyone.
For more information on the FWS, please refer to resources on the TAFEP website.
Right. We hope you've enjoyed that video and have a better understanding of how FWS works as an important tool to allow companies to be nimble and to save jobs, right? So next, I'd like to invite our first speaker, Ms. Zarina Pipadi from 8Lisk HR Consultancy Private Limited, to share with us the components of an agile compensation structure and how performance management is closely linked to compensation and FWS. With 35 years of experience in the airline and aerospace industry, Ms. Pipadi has deep and broad experience in human capital strategy formulation, talent management, workforce planning, industrial relations, and the whole spectrum of HR services. Now, she was also the Chief Human Resources Officer for 15 years at SIA Engineering Company Limited, where she oversaw major manpower initiatives for transformation and productivity campaigns. Now, let's hear it from Ms. Pipadi.
Thank you. Let me just share my screen. All right, thanks, James, for that introduction. Good afternoon, everyone. I'm very pleased to be here to share with you what an agile compensation structure is about and what are the components that make up such a compensation structure and how would you be able to implement it within your own organization. So let me just dive in right away. So what is a wage system? It is a set of policies, programs, and practices within your company to determine the total compensation for your employees. And compensation here refers to salaries, incentives, bonuses, benefits. So it's the whole spectrum of what you would pay your employees. And the value that an employee receives for his services is made up of all of these different parts, and it adds up to the total compensation given by the organization. And what the organization then recognizes as total comp is all of these expenses put together, is the sum of all of these elements, and the majority of which is monetized. So what is a flexible wage system? It is one of the levers in TAMEM being the tripartite advisory on managing excess manpower and responsible retrenchment. Now, this was put out in October 2020 on the heels of COVID to guide companies on how to manage excess manpower due to the significant downturn in business, and to be able to guide them on how to manage costs and to the best of their abilities to push back retrenchments, and perhaps not even do it when business picks up later on. So as part of these levers, FWS, it is about implementing a system that comprises a fixed base wage structure together with monthly and annual variable components, so that you have that flexibility to be able to draw on to bring down your wage cost during bad times and increase it during good times. So what is desired is to have a nimble and competitive wage system that gives you that tool to make quick adjustments, and it allows companies to remain cost competitive during the times such as COVID. And it allows companies to therefore retain their employees because they can then manage their cash outflow during such times. So the key objectives of FWIS is, one, of course, very important, is to sustain the business, because companies need to be able to ride out such business cycles by managing wage costs. In some companies, wage cost is more than 80% of total cost within the company. Some companies where other cost items can be very high, then wage costs can be even below 20% because they are very low on labor account, but high on other costs such as perhaps IT or some other cost items like supplies, such as fuel costs for airlines, etc. But for many companies, generally wage cost is a major cost item, and therefore to be able to sustain itself, it needs to be able to manage such wage costs during business downturns. The other is to increase flexibility to be able to make quick adjustments to wage costs in line with different business conditions. And lastly, to enhance competitiveness, because you need to maintain wage competitiveness to be able to attract individuals to join your company, and once they are in, to be able to retain them within the company. So what is FWS? What are the components? So these are the components. Besides the fixed wages, it is to have a monthly variable component. It is part of monthly basic pay, but it can be adjusted depending on the financial situation of the company. And in managing this MVC, to bring it up or down, companies should set clear guidelines on when such adjustments should be made and when such adjustments should be reinstated for the employees. The annual variable component is something that is directly linked to the company's performance. It varies directly with the company's operating or financial performance, or even both. And if a company is not performing well, the AVC will be adjusted partially or not given at all. And such variable portions can include the 13-month bonus, or the AWS, as some companies call it, the company performance bonus or profit sharing bonus. And in some companies, there are things called performance incentives or even other variable payments. So what is monthly variable component? We talked about that. Monthly base salary, this is used in computing overtime salary in lieu. Salary in lieu of notice, paid leave as CPF. So it's made up of these two portions. One is the monthly fixed salary, the other is the MVC. So MVC is used to compute CPF, to compute all items that normally you would relate to the monthly base salary. So what is a performance-oriented, flexible, and agile wage system? Performance-oriented means to relate it to the company's financial performance or operational performance, and it pays for team performance as well as employees' individual performance. So you recognize performance and you make it performance-oriented as such, based on both the company level as well as the individual level. Flexibility is about paying more when the company does well, paying less when the company is not. It also allows the company to reward better performers more than the other staff. And it also provides incentives for everybody to drive towards so that their own salaries can be better for the whole year. Agility, so it is about speed in re-leveling wages in tandem with how the company is performing. You should have speed in adding on or removing incentives as and when the company needs them. And there should be transparency in when and how the company will manage such items of compensation. So what are the ups and downs in wages? How do the company trigger such reductions in salary? All of that should be communicated to the employees, and there should be transparency in how it is done. So the objectives of a good wage system, we mentioned about attraction and retention of employees. It's also about motivating productivity and quality of performance. It is about controlling labor costs of the organization so as to sustain the business. And these are the aspects of a good wage system. It's a fair and equitable wage system, allows you to attract, to retain employees. It gives you a satisfactory fixed wage in each month. Now, this is an important aspect. When we say that we want to introduce a variable portion to pay, we should also be mindful that the fixed portion should be reasonably at a level that is sufficient for employees, because employees would have certain commitments, financial commitments every month, and there should be a certain level that is assured that they would be getting every month. So there should be a satisfactory fixed wage in each month for each employee. And then the balance, that's where the variability can come in. It also, a good wage system also recognizes and pays more for better performance and higher skills or competency levels. There should be flexibility for changes in total comp, as we talked about, based on the companies as well as individuals' performances. And there should be, importantly, ease of understanding, because there's no point having a wonderful wage system made of many parts, but if the employees don't understand the components and don't understand how it all works together to give them total comp for the year, then it cannot possibly be allowing them to drive their own performance and therefore drive the company's performance. So there should be ease of understanding amongst the employees. And there should be sufficient comps on the wage system to employees as well as those companies have unions. Then it should also be communicated well to the unions as well as to the employees. And transparency, as mentioned earlier, in how all of these components work to derive the total comp for the year. How do the variable components, how do they get adjusted? How do they get reinstated? So fixed monthly salary, a satisfactory level as mentioned, and this is not dependent on the company's profitability or the employee's performance. The exceptions are for deductions for AWOL or no pay leave, etc. And the employee has an assurance of a steady receipt of income each month. That's an important part. And that's what the fixed monthly salary will do. And then the MVC, which is part of the basic salary, the monthly basic salary, but it can be adjusted depending on the financial situation and based on clear KPIs. And we'll talk about that in a little while. So this is also used in computing overtime payment and CPF contribution. And companies should set clear guidelines on when it can be adjusted partially or fully and when it should be reinstated. And then we have the AVC, which is a component directly linked to the company's performance. It varies directly with the company's operating or financial performance or both. And it can include profit sharing bonus, the AWS, performance incentives, etc. And importantly, there can be differentiated payouts based on the employees and the team's performance levels. So during 2020, many companies would have had to resort to wage cuts to preserve cash and sustain the business. So some companies cut 5%, some cut 10%, some cut even more. But now that Singapore is on a recovery curve, several companies have reinstated the wage cuts or are considering to do so. And as part of reinstatement, this is where we encourage companies to restructure the wages to include the MVC component of 10% in monthly salary. That's the guidance, MVC at 10% of total monthly salary. So this is an example where during 2020, there might have been a 5% wage cut. So let's say for a salary of 2005, the wage cut would have been $125. And now at reinstatement, this 5% cut is returned back to employees. So the fixed basic wage is 2350. This return is done in the form of MVC. So MVC is now at 125. Total monthly salary is 2005, which is what the employee would have gotten before. But now it is made up of two parts. And then future salary increases are to be categorized as MVC until it reaches 10% of monthly salary. So this year, when there's a salary increment, put part of it into MVC. Next year, any future adjustments of salary are to be in the proportion of 90% fixed basic and 10% MVC. So any future adjustments, bear in mind, once you get to that 10% level, any future adjustments have that proportion of 90-10 so that you maintain that 10% component within the total monthly salary. And this is another example where 10% was cut during 2020. So the entire 250 is now returned back as MVC. And now MVC is at 10% of total monthly salary. So what needs to be done is any future adjustments, just maintain that proportion of 90-10. And this will allow you then in future, if there should be any future crisis and you need to realign back the wages to sustain the business, then this is a component that's already available. The staff would know about it, and they would then know that, okay, this is one portion that may be at risk if the companies need to protect the cash flow. So the MVC component allows companies to sustain itself, really about preserving cash for operations and to allow them to retain the employees rather than reduce the headcount to be able to reduce the wage cost. So here it is about reducing the wage cost for everybody, but be able to retain them within operations so that when business picks up, everybody is still in the organization and their salaries can then be returned to them. A clear mechanism to activate MVC cards is important. The reinstatement of it is also useful so that there's clarity for employees and there's transparency in what the company is doing. So these are the questions to ask. What is the trigger for MVC cut and reinstatement? And you need to determine the level for a company to see itself in financial distress. What is financial distress for one company can be very different for another company. So you need to look at your own situation. What is your cash flow like? What are the contributions in expenses within the organization? What are the revenue expense levels? And depending on the company's cash position, obviously, how much losses can be absorbed before cash goes into a position where the company needs to go to the bank and draw on the credit line, etc., etc. So all of this needs to be considered in deciding what is the trigger, what is the level for that trigger. So this is an example of an MVC table to activate and reinstate wage cuts. So where it is considered that an operating loss of 100K is already a very difficult burden to absorb, then it could be set at anything of 100K, less than 100K, a quarter of MVC is cut. So it must first go into a loss. And then if that loss is less than $100,000, then a quarter of MVC, which is 2.5% of monthly salary, that's what is at risk. If the monthly losses, operating losses goes up to 200K, then half of MVC may be cut. If it goes up to 300K, 3/4 of MVC may be cut. And if it's more than 300K where the company is really suffering, then all of MVC may be cut, which is at 10% of the monthly salary. And when the loss reduces or changes to the profit is reported in the latest quarter, then the MVC is reinstated in the following quarter. So this is a situation where the company shares with its employees quarterly results, and based on those quarterly results, actions may be taken on the MVC. So every quarter, the company will look at its own financial situation, shared with the employees, and then makes the appropriate adjustments. So if it goes worse, the MVC may go up higher. If it starts improving, the MVC is restored. Whatever's been cut, it may be restored back. When it goes into a profit situation, then all of the MVC that has been cut would be reinstated. So this is how the table is used. So companies ought to ask itself whether it has an MVC component already within its wage structure. If it's yes, then these are the further questions. Is it clear when and how the MVC is to be cut and when it is to be reinstated? And do your employees know how the MVC is to be used in times of financial distress? Do they understand what the MVC is about and what are the trigger levels for cuts as well as the levels for reinstatement? And during 2020, did you cut the MVC? Do the employees now know when it will be reinstated? Now, if you do not have an MVC component today, now is the time to carve out a portion of monthly total salary into a proportion of 90% fixed basic and 10% of MVC. And the default scenario, of course, is that MVC is paid every month along with the fixed basic pay each month, and it's only at risk when the company is facing such a crisis. So you should develop the table that shows what financial crisis or financial distress would mean to the company, at which level would MVC be cut, at which level would it be reinstated. And then after all of that, you need to inform the employees about the structure and explain clearly when and how it will be used. It's important to share that ahead of time, not when the crisis takes place, but ahead of time, so that they know what this is about and they are therefore prepared for the company to take action if in future a financial downturn affects the business and the company needs to dig into the MVC. Okay, we've talked about MVC. Let's move on to AVC. The AVC component allows companies to reward its employees based on the company's performance. It recognizes the employee's performance and rewards at different levels for different level of performance. And the wage cost is re-leveled up or down depending on the company's financial situation. And because of the different component that is added on to total compensation for the year, it motivates desired behaviors for employees within the company and drives performance for the company. So AVC can be in the form of a 13-month bonus. Many companies pay that in Singapore, the AWS, or it can be a company performance bonus or what we call profit sharing bonus. It can be performance incentives and other variable payments. So what is important is to determine what is good for your company, what is a suitable AVC component for your company, and what is the frequency for such payments? Should it be given annually, half-yearly, or even quarterly? And you need to decide on the metrics to be used to determine the AVC component. So what is important for the company to deliver? Is it profit? Is it safety improvement for the year? Is it growth? Is it customer satisfaction or productivity? Or is it a combination of all of it in a balanced scorecard manner? So be clear also on the company's affordability while setting the metrics and the levels at which you want to pay out bonuses to the employees based on those metrics. You need to be mindful of what is the profit that you want to share with the employees. Out of your total profits, is 20% something that can be shared? Is 33%, 1/3 of profits something that you want to share with the employees? Is that affordable? Is that reasonable? So you need to determine what is the proportion of total profits that you want to be able to share with the employees. So these are questions that a company needs to ask itself in setting up the table for an AVC. So this is an example of a performance-based bonus structure. So you set performance levels for each KPI, and then you set different levels of performance. So in this example, where profit may be a KPI, you want to say, okay, for level 1 profit, it is $0 to $2.5 million. Level 4 profit is anything more than $7.5 million. And for safety, a level 1 safety is something where more than 4 safety incidents are reported. A level 4 safety, which is the best level, is there were 0 incidents during the year. So let's say that these are KPIs you want to set. You need to also determine what are the levels for differential sharing. So this could be a potential table where there are 4 different metrics: profit, safety metric, output metric, productivity, and customer score. And then based on all the 4 metrics and the different levels of those metrics, you then determine what is the total bonus that is to be shared with the employees, right? So level 1 bonus, where all the 4 KPIs are at level 1, could result in a 0.625 month bonus. And then a level 4 bonus, where everything performs at the highest level, where all the 4 KPIs perform at its best level, you could be sharing 3.25 months bonus. Now, this is just an example. So companies may decide that level 1 could pay 1 month and level 4 could pay 5 months or 6 months. So it's entirely up to the company to decide, because if you remember, one thing that you need to look at is affordability and what proportion of profit you want to share with your employees. So having set the table and having determined what is the bonus pool, then you want to say, how would you distribute it to your employees? How would you want to motivate performance amongst your employees such that they know that there are differential payouts for different levels of performance? You can integrate a merit or performance bonus within the bonus pool so that you then are able to motivate individuals to perform better, so that they know that when they do so, they get a better bonus at the end of the year. So when a pool is for 2.25 months bonus, a good performer may get a higher bonus of 3 months, an average performer may get 2 months, and then a below average performer may get 1 month. So this is an example of a table for differential payouts. So for a payout of 2.25 months in the bonus pool, a good performer would get at the multiplier effect of 1.3 times, and you can get 2.9 months bonus. An average performer gets 2 months, and then below average performer will get 1.125 months. And then for a bonus pool of 3.25 months, a good performer would get in excess of 4 months. And the average performer should get about 2.9 months, and then a below average gets 1.6. So you see that there are different levels of bonuses for different levels of performance and different levels of bonus pool. And that bonus pool was determined based on the different metrics that had been decided within the profit sharing or the AVC table formula. Now, besides the example of a profit sharing bonus, a company may also structure AVC to push for other deliverables. So the company should ask itself, what is the focus for the company this year? What are we all trying to push for in operations? What is the strategy that's being focused on? What do we want to achieve by the end of the year? So using that, it can then decide that, okay, we think to be able to raise the level of sales for the year is important, and therefore to be able to exceed the annual sales target is an important factor. So they may decide to structure a variable component based on an annual sales target to be achieved. Or it could be a reduction in expenditures. So it depends on what it is that the company is focusing on. A budgeted operating profit, that's the profit sharing bonus. You saw that in that level that we shared just now. A productivity improvement project, that could be another type of KPI that set a new product to be launched, or even a transformation program to successfully change, to pivot the company's business into something else. So the company needs to decide what it is that it wants to focus on, and using that, galvanize all of the staff to work together to achieve it by structuring it as a variable payment that they all can share in at the end of the year if things are achieved. So some examples could be team and individual incentives for the sales team for delivery of the sales target, productivity payouts when productive improvement targets are achieved, and transformation bonus when key change initiatives are recorded. Now, these incentives, all of these incentives can be paid either monthly, quarterly, or annually. So you could have a structure where monthly, the sales staff receive a monthly variable incentive pay back to achievement of sales targets at the team or individual level. And quarterly, there could be a payment for all staff when a productivity level is achieved, or a transformation bonus milestone is achieved. Annually, all staff may enjoy a performance bonus at the financial year end, depending on achievement of the different KPIs that have been set into the formula and their individual performance assessment. So they could, therefore, the whole total compensation for the year could be made up of their fixed pay, obviously, and then a monthly incentive pay, a quarterly incentive pay, as well as an annual ABC. So how do you implement the ABC within your company? Firstly, we talked about linking the ABC to the KPIs, whether they are financial indicators, operational indicators, or whatever strategy that you're trying to develop for the year. And once you've done that, you also need to think about having to set aside the budget to pay for such ABC payments. And then provide clear targets and trigger points at different levels. So build up that table so that you may be able to share with the employees what that is about. And you also know at which levels you're driving at and how do you share that out with the staff. Then you need to discuss this closely with the unions. There's a question that someone had asked earlier in the chat. What if the company doesn't have unions? Well, if there isn't a union, then discuss directly with the employees. Share this at a town hall meeting or small group discussions even. Share with them what this is about and what it is that the company is trying to achieve and how does it work, what are the components, what are the trigger levels, etc. So you need to communicate this clearly to all employees. If there's a union, communicate clearly to the unions and consider whatever feedback as well that the unions give or the employees give during such communication sessions. And then you need to review the performance management system as well to ensure that to be able to pay out differentially for different levels of performance, you need to be able to ensure that there is a fair and objective assessment of performance, because only then would you be able to ensure that the payouts are based on a fair assessment. Then, of course, communicating it, be transparent to share what it is that the company is achieving. You must be able to share those achievements on a regular basis. So you must have strong internal comms, as well as set a helpline or a call line for staff to be able to reach out, to ask questions, and to be able to clarify to them what this is about. So HR must be well prepared to be able to communicate this and to answer any queries that staff may have about such a structure. Now, besides HR, there's also the managers of departments and small teams that needs to be put up to speed as well on how they may be able to answer their own staff on some of these questions, because not everybody would be comfortable reaching out directly to HR. More often than not, they reach out to their own managers. So managers should be the first group to be briefed on how this works so that they can then explain to their own staff as well what this is about and how it is to the basis of it and how it is to drive performance and how it is that the company wishes to share its profits when the company is doing well. So some companies may already be paying its employees annual bonuses or incentives on a fully discretionary basis. So this really means that at the end of the year, there is some bonus payments made to some staff or some bonus, a bonus payout, which is constant for everybody. But it is then decided at the end of the year by the bosses in the company. So those companies may say, why do I then need a structure? I can continue to make it fully discretionary. Why set up a structure to administer such payments? Well, we think that a defined structure for bonuses and incentives allows a company to be transparent in its reward scheme. And if there's transparency and the staff understands what this is about, it builds trust with the employees and it motivates what they know to be available within the company. It would motivate them to be able to perform at a higher level so that they can drive towards getting better rewards for themselves. So a defined structure allows that. And with transparency, clarity, and trust, employees and employers can work together, collaborate, and cooperate during good times as well as bad times. So during COVID, I think we realized that there was a need for all employees to work together with their bosses to be able to bring the company back to health, right? And to be able to manage costs such that everybody continues to retain their jobs. And with a structure in place and with speed with which employers could make such changes during such times, everybody wins at the end of the day, because employees would retain their jobs. Employers would be able to manage their costs quickly so that they don't need to start digging into more and more debt to be able to support cash outflow. And therefore, when business picks up, the recovery for that company would be far faster than everybody else, and they would be able to then start rewarding the employees when business picks up and profitability returns to the company. So it's a win for everybody. Now, besides what we talked about within the wage structure, there's also a salary range that can help to strengthen the entire wage structure within the company. So what the salary range is about is setting in place a scale of salaries that would recognize the value of the job. And within that range, there is a minimum and a maximum salary that is payable for that particular job within the company. And it allows companies to then make sure that wages are competitive, because when they build up this salary scale, they would also look at what it is that the market is paying for such jobs in other companies. So to be able to attract individuals into their company, they would have to look at what the market pay is, and therefore set that salary range to be able to match up to that, and therefore be able to not only attract employees, but also retain employees, because once they join the company, they would also be able to grow up the salary ladder and build upon competencies so that they get to earn more and more as the years go by. So companies should calibrate their salary scales through doing job evaluations to define what is the value of the job. So you have to look at the job, what is the knowledge and skills required, what is the different levels of jobs within the company's hierarchy. So an example could be for the executive level, the minimum of 3,000, a maximum of 4,005, so a ratio of 1.5. And then once the executive has sufficient years of experience and has built up on his skills and competencies, then the range moves up to 4,002 to 6,003. That's generally an overlap of the max of the previous range and the min of the next salary range, because you don't need to get to the max to be able to move up into the other range, because you may move up into a senior executive role ahead of having reached the maximum of the range. But it allows that growth to go all the way up to the max if there should be delays in building up the competencies and one does not move into the next salary range. And for both examples here, the ratio is 1.5, so that it's not seen to be a very wide range, because then one should be careful not to overpay for the value of the job. That is what the range is for. And this is how then it would progress up over the years. So there could be different grades for different types of jobs within the company and different ranges for each of those job levels, job families. And as the individual picks up competencies and experience for those jobs, then they move up the salary ranges, they move up the job families, and their salaries would also grow in tandem with that. So how do you implement a performance-oriented, flexible, and agile wage system? You need to communicate the wage structure to employees. So directly communicate to employees if there isn't a union within the company, or work through the unions as well as directly with the employees if the company is unionized. And then you set and inform clear goals for employees and the company's performance, and you provide regular feedback on employees' performance and the company's performance so that employees know what is going on within the company and how it is that their salaries are going to be for the end of the year and for the next quarter, etc. So as we recover from COVID, it is important that we recognize the sacrifices made by the employees. We share the higher profits that companies will start to make if it's within the company's financial means. We review the wage structure, make changes to be better prepared for the next crisis. That's very important. Be prepared. So you implement MVC and ABC, and you have transparency and build trust with employees. And you have ample comms and frequent feedback to all employees. So in summary, a good wage system is important to deliver the company's objectives and attract and retain employees. Flexibility in total wages would allow you to better ride good and bad times and to motivate employees and the company's performance. And important to note, it is that this FWS is not about cutting wages. It is as much about paying well in good times as it is about adjusting down in bad times. So that's an important thing to communicate to all employees. Companies do want to reward well when it's performing well. So the FWS allows that. And speed of adjustment of total wage cost is often critical when the company is trying to sustain itself. So thank you for your attention, and we'll take questions later on.
Right, thank you, Ms. Pipadi, for your very insightful sharing. Now, Ms. Pipadi will be taking questions right after the sharing of our second speaker. So in the meantime, if you have any questions for her, if you look at the bottom of your screen, there's a Q&A function key, right? So just use that function key and key in your questions for her. Right, now, before we come to the next speaker from Raffles Hotel Singapore, I have the pleasure of sharing a video depicting Raffles Hotel's journey in wage adjustments at the onset of COVID-19 and subsequently restoring wages. Now, the process was made possible with effective communication to employees and trust between the management and the employees. Now, let's roll the video, please.
Raffles Hotel Singapore reopened in August 2019 following a careful and sensitive restoration, which included both front and heart of house areas. A few months later, Singapore saw its first case of COVID-19.
At the onset of the COVID-19 crisis, the hotel communicated to all colleagues on the need to implement contingency action plans as well as cost-saving measures. This included clearing of annual leave, attending training programs, as well as freezing of annual increment.
Over the years, we have initiated several best practices, one of which was the implementation of the hotel's flexible wage system aligned with the recommendation of National Wages Council, NWC. The hotel implemented monthly variable component, NVC, in 2001 and raised it gradually to 10% by 2004, with the support of Food, Drinks and Allied Workers Union. The hotel further worked with FDAWU on wage restructuring, detailing the hotel's NVC and annual variable component, AVC. The ongoing COVID-19 pandemic has severely impacted the tourism and hospitality sector. With our NVC, it enabled us to implement wage adjustment measures to protect our colleagues' jobs. We discussed with SNEF and FDAWU on the parameters of wage adjustment. The senior management took the lead by having a higher percentage of wage adjustments.
We were each issued a letter detailing the need and reasons for wage adjustments. Although it was tough, this form of communication went a long way in sustaining our trust during such a challenging period. The letter also provided us the assurance that our wages would be restored when business conditions permit.
After taking some time to understand the scheme, I realized while difficult, it is necessary to do the step to protect our job. We need to remember these are temporary measures till the situation improves.
The COVID-19 pandemic is indeed a very challenging period in manpower management, but it is gratifying to see jobs saved. We have built a stronger relationship with our colleagues during this time and look forward to welcoming our guests from all over the world back to our national icon when travel borders reopen.
Well, what an inspiring video. Now, let's hear more from Ms. Jennifer Tan, Director of Talent and Culture from Raffles Hotel Singapore. Now, Ms. Tan has overseen the Talent and Culture Human Resources Department at Raffles Hotel Singapore for more than 20 years. Now, she is the guardian and gatekeeper of the company's values while driving a caring, supportive, inclusive, and fun work culture at the hotel. Now, during her tenure, she has initiated and successfully implemented several human resource best practices, leading to numerous human resource related awards nationally and in Asia Pacific for Raffles Hotel Singapore. Now, without further ado, let's hear from Ms. Jennifer Tan, please.
Thank you, James. Good afternoon, everyone. It is the privilege of Raffles Hotel Singapore to be invited to present our flexible wage system, saving jobs in times of pandemic and economic crisis. Opened in 1887, Raffles Hotel Singapore is one of the few remaining great 19th century hotels in the world. The hotel fully closed in December 2017 for a full hotel restoration and reopened in 2019 after a careful and sensitive restoration, with a soft opening in August and a full opening in October 2019. With new restored suites and facilities, 115 spacious suites in 9 suite categories, 10 restaurants and bars, including 3 celebrity restaurants that include La Dame de Pique by Anne Sophie, one of the few female three Michelin star chefs, Osteria BBR by Alain Ducasse, 3 Michelin star chef, with the most Michelin star restaurants in the world, and E by Jeremy Leong, our local celebrity chef. 5 event spaces, including Jubilee Ballroom, that was transformed from our previous theatre playhouse, Jubilee Hall. Raffles Spa, that recently won the annual World Spa Award hotel category. Raffles Arcade and boutique that incorporates the hotel museum. Raffles Hotel Singapore's employer value proposition is to select the right talents, develop and engage these talents and our colleagues to be a part of Singapore's finest hospitality team as our Raffles story continues. There are 2 parts to Raffles Hotel Singapore's flexible wage system: monthly variable component, NVC, as well as annual variable component, AVC. Raffles Hotel Singapore implemented monthly variable component, MVC, with effect from 2001 and met the 10% NVC benchmark as recommended by the National Wages Council, NWC, since 2004, with the support of Food Drinks and Allied Workers Union, FDAW. The MVC may be adjusted downwards in the event of a national crisis, national economic crisis, or a severe financial situation in the hotel's operations, as agreed between the hotel and the union. That is, in the event of an economic crisis or severe financial situation in the hotel's operations, if agreed by the union, the hotel may cut a percentage of the MVC from the monthly salary of our colleagues. Where the MVC has been adjusted downwards, the same shall be restored in accordance with the prevailing economic conditions or financial performance of the hotel as agreed between the hotel and the union. That is, should the hotel cut MVC from the monthly salary of our colleagues, and when the economic condition or financial performance of the hotel permit, the monthly salary of our colleagues will be restored to what it was before the MVC cut. With the announcement of the National Wages Council, NWC 2020-2021 supplementary guidelines, in October 2020, the hotel, with effect from 1st January 2021, increased from 10% NVC that we had since the year 2004 and aligned the NVC of management colleagues not covered by the collective agreement to that of the NWC supplementary guidelines on flexible wage system. Colleagues covered by the collective agreement met the 10% NVC benchmark as recommended by the NWC supplementary guidelines on flexible wage system. As such, there was no further increase in NVC for these categories of colleagues covered by the collective agreement. This slide shows Raffles Hotel Singapore's flexible wage system with effect from 1st January 2021. There are 3 categories of colleagues or positions here. The first category, collective agreement positions, with NVC at 10%. Collective agreement positions here would be the rank and file, as well as some junior management positions. NVC here, as I said, is at 10%. Annual variable component, AVC, or variable bonus, is on average 10% or more, depending on the financial performance of the hotel. The second category, non-CA management positions based on salary range from a range of more than 4,005 to 6,005, with NVC of 20 to 25% and annual variable component, AVC, or variable bonus, on average 10% or more. When we add up the 20% NVC and 10% AVC, we get 30% of wages variable. Similarly, when we add up 25% of NVC and 10% of AVC, we get 35% of wages variable, as recommended by the NWC supplementary guidelines in October 2020. The last category is our senior management colleagues. That would be our executive committee and department heads, as well as management positions where the salary range is more than 6,005, with NVC at 25 to 30% and AVC or variable bonus or target bonus from 10 to 20%. In the case of our senior management, the executive committee, the target bonus could potentially be 20% or more. As such, the NVC of executive committee is at 25%. So when we add up 25% NVC and 20% AVC or bonus, that would give us the 45%. For the department heads and the management positions where the salaries are 6,005 and above, NVC at 30% and AVC at 10%, that makes 40% of wages variable. When the hotel increased the NVC from 10% since the year 2004 to what was recommended by the NWC supplementary guidelines in October 2020, each colleague was issued a letter detailing the need and reasons for adjustment or increase in NVC, as well as details of the new NVC. And each colleague signed acknowledgement of understanding and acceptance of the new NVC. Each exco or head of division had one-to-one conversation with each of their colleagues to communicate and explain the content and details in the letter. Colleagues were communicated and explained as follows. The next 2 points are extracted from the letter that was issued to each colleague. Quote, NVC is a percentage of monthly basic salary that would help companies remain viable in times of sudden and severe business downturn. For example, SARS crisis, and COVID-19 pandemic through the adjustment of which cuts, through the adjustment of which costs or which cuts in order to save jobs. The next point, quote, the NVC amount or a percentage of the NVC amount could be deducted from your monthly basic salary in times of severe business downturn, and colleagues will be informed accordingly when there is a need for such wage adjustment or wage cut. Your monthly basic salary will be reverted to original monthly basic salary before wage adjustment or wage cut when there is no longer a need for such wage adjustment. The other part of the hotel's flexible wage system is annual variable component or AVC. Raffles Hotel Singapore signed a memorandum of agreement, MOA, with Food, Drinks and Allied Workers Union, FDAWU, on wage restructuring in 2004, detailing the hotel's monthly variable component, MVC, as well as annual variable component, AVC. A formula is defined by the hotel and the union for annual variable component, AVC payment, based on the financial performance of the hotel for the year, as well as each colleague's work performance for the year. In the case of Raffles Hotel Singapore, our financial indicator is EBITDA, earnings before interest, tax, depreciation, and amortization. Each year, the hotel signs an agreement with our union, FDAWU, on the financial KPI, which is EBITDA. The EBITDA benchmark is actually our EBITDA budget, and this EBITDA budget is the figure that the hotel commits to financially perform for our owner. Should the hotel at the end of the financial year, our financial year is from January to December, and after the financial reports are audited, usually by January the following year, we would know the financial status of the hotel. Should we perform 100% of the EBITDA benchmark as agreed with the union at the beginning of the year, the pool of AVC to be shared with the colleagues is 1 month. Should the hotel EBITDA be between 70% to 100% of the EBITDA benchmark, that means we do not achieve 100% of the EBITDA benchmark, the pool to be shared for AVC would be less than 1 month. Should the EBITDA benchmark be below 70% of the EBITDA benchmark, it will be 0 AVC. Having said this, there were years where the hotel did perform below 70% of EBITDA benchmark. For example, when the hotel fully closed for restoration. And for example, during the recent COVID-19 pandemic, there would have been no AVC or bonus. The hotel, however, requested our owner to pay ex gratia payment as goodwill to our colleagues, and our owner did. On the other side, should the hotel perform more than 100% of the EBITDA benchmark, the pool of bonus to be shared with colleagues would be more than 1 month, calculated at 15% incremental. So the pool would be more than 1 month, up to 2 months bonus. Having said this, there were also years in the past that the hotel had financially performed exceptionally well, and the hotel requested our owner to pay ex gratia payment beyond the 2 months AVC. With the implementation of the hotel's flexible wage system, incorporating MVC and AVC, the hotel structure and formula for MVC and AVC are in place, and agreed between the hotel and FTAW. When it comes to payment of AVC during normal good times, we want to reward our colleagues financially, as well as in the event of a national economic crisis or a severe financial situation in the hotel's operations, when urgent temporary wage adjustment or wage cuts of colleagues need to be made in order to save jobs and avoid a retrenchment exercise. On this note, I would like to encourage employers who have not implemented flexible wage system yet to do as what Zarina had advised. It is in times like this when we are not in the middle of a crisis to work out the structure, the formula. We in HR are not experts in this area. Let your head of finance and your CEO come up with that structure and formula and communicate and negotiate with the union in normal times, because it would be very difficult to negotiate in the middle of a crisis and for the union to agree in the middle of a crisis. If you're not unionized, it's also good to set the structure and formula in place and communicate to colleagues in normal times, because it is difficult to do that in the middle of a crisis. During the offer of employment contracts, colleagues of Raffles Hotel Singapore are communicated and explained by Talent Culture or Human Resources, their NVC and AVC as detailed in their letter of appointment. That is, all our colleagues, existing new colleagues, have NVC and AVC included and detailed in their letter of appointment. During onboarding, our Talent Culture or HR team communicates and explains the details of NVC and AVC that are detailed in their letters of appointment. Colleagues will be mentally and financially better prepared should there be a future need for NVC to be temporarily deducted from their monthly basic salary in the event of a national economic crisis or severe financial situation in the hotel's operations, as agreed between the hotel and the union. The hotel's flexible wage system was implemented with the support of FTAW. The hotel and the union jointly communicated and explained to all colleagues the details of the hotel's flexible wage system. Colleague communication, care, trust, and engagement are key to the successful implementation of flexible wage system. The hotel had to exercise and execute the NVC cut from monthly salaries of our colleagues during the recent COVID-19 pandemic. I'm now going to share with you the actual experience of the pandemic. The COVID-19 pandemic has very severely impacted the tourism and hotel sector, including Raffles Hotel Singapore, that has remained open throughout the pandemic and not taken stay-home notice, quarantine, etc. business to ensure its global reputation stays intact. We at Raffles Hotel Singapore we were relying only on staycation and F&B business. And as we know, during the pandemic, F&B was restricted in covers, 8 packs, 5 packs, 2 packs. So it was a very financially challenging period for Raffles Hotel Singapore because we did not take any of those COVID-19 business. Stay home notice, quarantine, all of that we did not take to keep the reputation of the hotel. Our manpower strategies, action plans, and outlook are to strike the right balance, managing the hotel's cash flow, not having excess manpower, maintaining Raffles service standards, enhancing efficiencies and productivity, and developing and retaining talents. The hotel actively participates and taps on government grants to support our payroll, as well as in government initiatives to train our local workforce. The hotel has protected its workforce with no retrenchment exercise throughout the COVID-19 pandemic. We continue to face, despite the economic situation and outlook, voluntary colleague turnover, especially of local talents who leave the services of the hotel due to concerns of high risk working frontline in a pandemic, or are poached by other sectors, etc. Raffles Hotel Singapore has a reputation in the market for training and developing talents, including some of the best service professionals, which makes us a natural target for recruiters. The hotel has also continued to actively support in local internships and work-study programs from local hospitality institutions, despite the financial challenges that the hotel is facing during this pandemic. Colleague and talent retention remain our key manpower strategies and action plans, while the environment gets more and more challenging. We need to retain our colleagues for the business after. These are colleague communication channels during the COVID-19 pandemic. Email to all colleagues, colleague notice boards, TV screens at colleague entrance, colleague corridor, colleague dining room, TalkTown, our internal colleagues' mobile phone communication app, Raffles Insights, our online monthly newsletter to all colleagues, daily operations briefings, regular managing directors Zoom or MST calls with all colleagues. At the height of the pandemic, when the local community cases were very high, we had as frequent as weekly Zoom or MST calls, one-to-one manager and colleague informal sessions. The hotel implemented other cost-saving measures during the COVID-19 pandemic before going into wage adjustments. And these are: all departments review the expenditure, although with approved budget. Hiring freeze on full-time, contract, and casual labor positions. All colleagues to clear public holiday in lieu and annual leave. Voluntary no-pay leave extended to all colleagues. Lateral service, that is, colleagues assisting in other departments, for example, admin colleagues assisting in raffle service call center, hotels mooncake promotion, etc. Non-extension, non-renewal of employment contracts for a group of foreign colleagues on work passes. Option of extended no-pay leave was also given to these colleagues. The hotel actively participates and taps on government grants to support our payroll, as well as in government initiatives to train our local workforce. Job redesign place and train program by Workforce Singapore. We implemented 6 job redesign projects during the pandemic. Mentor assistance program by E2I. We implemented 10 cross-training and multi-skilling projects during the COVID-19 pandemic. Enhanced Training Support ETS program by Skills Future Singapore. That is enhanced absentee payroll for local colleagues. Enhanced Work-Life Grant by E2I in the area of flexible work schedule. Deployment of colleagues to Ngee Ann Polytechnic as social distancing officers and temperature screening officers. Senior Worker Early Adopter Grant by Singapore National Employers Federation, SNEF, in the area of early adoption of new retirement age ahead of legislation, as well as part-time re-employment grant by SNEF, that is the option of part-time employment for re-employed colleagues. It was only after all the other hotels' cost-saving measures were implemented and tapping on government grants and initiatives that we, as a last resort, implemented wage adjustment measures during the COVID-19 pandemic. Wage adjustment, that is NVC, no pay leave, and more than 10% NVC was deducted from the monthly basic salary of management colleagues, with the senior management team taking the lead with more and larger wage adjustments. If you recall earlier, I shared in the earlier slide that the hotel had already met 10% NVC since the year 2004. However, during the recent COVID-19 pandemic, despite all the other cost-saving measures implemented and the government grants and initiatives, the 10% NVC was insufficient to support the hotel's cash flow situation. As I had shared, we did not take any of the government COVID-19 business and relied only on staycation and F&B, and we were very, very much financially impacted. For the CA positions, we implemented 1 to 2 days no pay leave during the months of June to August 2020. For the rest of the colleagues that were not covered by the collective agreement, junior management all the way to senior management, we had wage adjustments either in the form of NVC cut or no pay leave from April 2020 to the management colleagues. I think we ceased in August, but for the senior management team all the way to November 2020. And the wage adjustment for this category was like 20 to 40% wage adjustment or wage cuts, with the senior management team taking more and larger wage cuts. Colleagues understood and experienced the need for wage adjustment during SARS crisis as well as COVID-19 pandemic in order to save jobs. We'd like to reiterate that Raffles Hotel Singapore only implemented wage adjustment measures or wage cuts as a last resort after implementing other hotel cost-saving measures and tapping on government grants and initiatives. And when that was not sufficient to support the hotel's cash flow situation, we only then, as a last resort, implemented wage adjustments. And it was done in a culture of care and trust. The hotel implemented progressive COVID-19 safe management measures ahead of regulations by the authorities. For example, the first COVID-19 cases that hit Singapore was in January 2020, just before the Chinese New Year that year. Right after coming back to work from the Chinese New Year, 2 or 3 days Chinese New Year break, we realized the risk, and very quickly, within the same week, we stopped in-person meetings in the meeting room and went into virtual meetings within the same week of coming back from the Chinese New Year break, when Singapore was hit with the first cases of COVID infections. Another example is the hotel went into split teams and working from homes from mid-February 2020, well ahead of regulations by the authorities. And also at the height of the pandemic, during circuit breaker, when the local community cases were very high, we kept our senior in age colleagues at home. Those colleagues are more than 60 years of age, including operations, regardless of whether these colleagues are participating in enhanced training support, ETS virtual training or not. Many of our senior in age operations colleagues had challenges participating online training because they are not IT savvy. They are not IT savvy. Despite this, we just kept them at home, and they were fully paid to keep them safe from being infected from the pandemic. And just as recap, this period there was no vaccination yet. There was ongoing colleague engagement. The hotel continued to participate in corporate social responsibility (CSR) during the pandemic. We could not participate in in-person activities, but we did what we could. The hotel continued to distribute our famous mooncakes, log cakes, Christmas log cakes, Chinese New Year cookies to the homes that we normally support: autism, underprivileged children, the elderly, including the ICU of Tan Tock Seng Hospital and NCID. We also continue to support Community Chest, Food Bank Singapore in terms of virtual events as well as digital fundraising. Colleague communication, care, trust, and engagement are key to the successful implementation of flexible wage system. Colleagues understood the tough but fair, progressive, and necessary measures that the hotel had to take with the objective of saving jobs, resulting in no retrenchment exercise throughout the SARS crisis and COVID-19 pandemic. With this, I end my presentation. Thank you.
Right, thank you, Ms. Jennifer Tan, for that very interesting sharing. We're going to get back to you, Jennifer, for the question and answer session on your presentation. Now, right now, ladies and gentlemen, we've come to the Q&A segment. Now, before that, just an assurance that we will be sending you a copy of the slides shortly after this webinar. Now, thank you all for your questions. You can still continue to send us your questions using the Q&A function below. Now, let's see. We have some questions for Ms. Pipadi. Let's invite Ms. Pipadi back to answer a couple of questions. Let me take a look at the questions.
Hey, I've got the questions, James. Yeah.
Okay. I'll just read out the questions. Yep. Okay. Right. I'll just read out one question you have, which is, besides rewarding staff according to company performance, like financial indicators, we also want to reward staff according to their personal performance, which not only includes their work performance, but also their attendance. For example, we let staff encash their balanced sick leave entitlement for the year. Now, recently there was some articles indicating that no MC benefits and all that. Is this allowed? Can this be clarified? Over to you.
Yeah. It's definitely good to recognize individual performance, and there are many ways to recognize individual performance. One is, of course, for their own job deliverables. How do they perform? Do they deliver on the expectations of the company? As well as some of the attributes that they bring to work, the attitudes at work, the way that they recognize the core values of the company. Now, these are all good things to include in recognizing performance of the individual. But when it comes to attendance, especially on whether or not an individual takes sick leave, that's where you want to draw the line. Firstly, I think I personally would like to be able to say that this whole mindset about sick leave, one shouldn't see it as an entitlement. When employment contracts are put out and they say that certain numbers of days of sick leave can be taken on a paid basis, it shouldn't be seen as an entitlement, but more the fact that, okay, we all understand that individuals get sick, and during such number of days that they do get sick, then the company will not cut salaries during those times that the employees are required to recuperate, stay at home. Importantly is that companies must want their employees to recuperate, sit at home when they're sick. And there should therefore not be any incentive scheme that encourages them not to take that sick leave, because then they may be sick and they still come to work, and that's really bad. So there shouldn't be an incentive scheme tied to individuals not taking their sick leave. There are even some companies that allow encashment of annual leave. Okay, so that's not sick leave, annual leave, although that's not disallowed, but I would say that even for that, use it very prudently, purely because when you allow certain number of days for annual leave, you want the individuals to go take it to relax, be with their families, to recharge themselves, because in today's context, mental health is also very important, right? So annual leave is given to individuals so that they can go and recharge away from work and come back refreshed to the organization. So definitely sick leave incentives, not taking sick leave as an incentive is a no-no, even for annual leave, preferably not. James, you want to read the other question?
Okay, let me get my mic on. Right. Okay, let's have, now the other question is, do we need to reflect MVC amount in the payslip, or is it just in the contract? Is it enough just to reflect it in the contract?
Definitely should be in the contract, but it is important to also reflect it in the payslip so that individuals understand what their pay is about. So they need to see that every month they get $2,500 or $3,000. They need to be able to see what it's made up of, so that in times of crisis, that shouldn't be the first time that they're saying, oh, actually my 3,000 was actually not 3,000 fixed, but 2,000 fixed and 300 MVC, right? It shouldn't be the first time that they're seeing it. So it should be reflected every month, which is the normal default scenario is that it is paid every month. It is part of your monthly pay. It's only drawn down in times of real crisis, right? But to get everybody into the mindset of understanding what MVC is about, and therefore that this portion is at risk, then have it shown in the payslip.
Okay, thank you. With just another question here, which is again for Serena. Now, upon reinstatement of the MVC, is the company required to back pay the full MVC cut during the downturn? Okay, the guidance is that one should set aside up to 10% of salary as MVC. And the guidance is that during times of crisis, this is a portion that can be reduced. Now, upon the company doing better, the guidance is to reinstate. It is not about paying back whatever has been cut. That does not, so that's the guidance, right? So reinstate, but no need to go pay back everything that had been cut earlier. That does not preclude, does not hinder the company if it does terribly well upon recovery to give an extra incentive to staff, to recognize that, hey, they did give up that amount of salary before, and maybe during that whole 1 year, the total salary cut was, let's say $2,000 for an individual. In the year that the company recovers and does very well, they may even pay $3,000 just as an outright incentive or bonus because the company has recovered so well. So it doesn't hinder the company from doing even better. The guidance is you don't need to pay back whatever's been cut, but do what is right for the company. What is motivating for the employees. All right, thank you. Right, just before we go to Jennifer, just one more question for you. Does MVC and AVC go hand in hand? Now, we have not implemented any of the two, that is MVC and AVC. Now, can I just implement MVC and just leave out AVC, or vice versa?
Well, these are two different components of total compensation. One is MVC that allows you to quickly bring up or down your salaries in times of crisis and recovery. And it therefore allows you to contain your wage costs when you best need to protect your cash flow. The AVC portion is really about adding the extra layer when a company does well. So the AVC is such that, when the company does marginally well, then it pays a little bit. When it doesn't do well at all, it pays nothing. So it is a layer that sits above whatever the individual gets on a monthly basis. It is definitely a good to have. So to have a very good compensation system, you need to have that monthly variability as well as you need the annual upside. So to motivate the staff to push themselves and to therefore work together to get the company to do better. But it can be, you can just implement MVC if you like for a start, and then building up on the AVC so that you have a more holistic total compensation structure within your company.
I see. Good. Thank you. Let's move on to Jennifer. Jennifer, we have quite a few questions here for you also. First question is, does it mean the job offer will be on an annual salary basis since the AVC is included in the salary range?
I'm not sure whether I fully get the question. I would attempt to answer it. In the case of Raffles Hotel Singapore, we have, like I shared, two parts to flexible wage system, the MVC and the AVC. So what is in their letters of appointment is the monthly salary, and then and then we define from the monthly salary what is the percentage that is MVC, and they will be explained that this MVC could potentially be drawn down or cut in the event of a national economic crisis or severe financial situation of the hotel. Otherwise, they continue to receive that monthly salary. For example, if the salary is the monthly salary is 3,000 and the NVC is 10%, we will include that out of the 3,000, 10% is NVC. And in the event of the crisis, up to that 10% could be cut. So the salary that's reflected in the letters of appointment, it's monthly. In terms of the AVC or the variable bonus, I mean, there is a clause that indicates that stated in their letter of appointment that depending on the financial situation of the hotel, which I've explained, we have a KPI, a financial KPI that has been defined with the union. In our case, it's EBITDA. It may not necessarily be EBITDA. It could be, it could be gross operating profit or anything like that. But in our case, it's EBITDA. So that is the financial indicator for the pool to be shared as AVC. I think in my earlier slides, I have also shared that how the colleague is paid out in terms of AVC is based on that financial pool that is to be shared in that year, and also based on the individual work performance of the colleague. That means the performance rating of the colleague. So in other words, should a colleague meet expectations, it could be a certain number of months. For colleagues who underperform, they would get 0 performance. For colleagues who perform above expectations, they would get a bonus that is higher than those who meet expectations. So for us, we've got 4 categories: meet expectations, above expectations, outstanding, as well as below expectations. So that part of the AVC is linked to individual performance. By the way, when I shared the AVC, this variable component is on top of our 13 months payment or the annual wage supplement is on top. So it's also in our contracts that our colleagues get the AWS. I'm not sure whether this answers the question of the participant.
Okay, thank you, Jennifer. I think we'll just go on to the next question, which is talking about communications, which I think is a very important element of this FWS journey. Now, Raffles Hotel did extensive communication with staff when wages had to be cut. Now, can you share a specific challenge that you faced with staff? during the communication?
In fact, we were so detailed. Yeah. As I mentioned, we had regular Zoom MST calls by our MD, as frequent as weekly, to explain to them what's out there at the national level, at the hotel level, so that they understand what's going on and what is the situation with the hotel, whether it's financial, whether it's operations. So communication is key. When we actually had to exercise and execute the NVC cut, we also regularly communicate what we were doing, all the hotel cost saving measures, that is non-payroll related. All these were all communicated so that they know what we are doing. And finally, when we actually had to implement, the NVC and the no pay leave, yes, we continued through those communication, through our managing directors MST calls. We do not just verbally communicate through the virtual calls. All colleagues dial in through their mobile phones. But it was not just verbal. We took the time to prepare individual letters for each colleague. Exactly what was the cut, how many % NVC cut, or how many days no pay leave. We had a mix of two, NVC cut as well as no pay leave, because we were not short of colleagues, especially at the height of the COVID-19 pandemic. And like I said, we did not take any of those business, and our colleagues there was hardly any operations, because just relying on staycation and F&B, and with very limited covers, 2 packs and all that, right? So we had these colleagues, and they were attending ETS training to help us get the grants. So we have colleagues, and so we realized that there was no need to actually implement the NVC cut. So we extended no pay leave instead. So 10% NVC is equivalent to 2 days no pay leave. So instead of a straight 10% cut, we offered them 2 days no pay leave. It was a 10% reduction in the monthly salary, but they get to enjoy the leave. Yeah. So we had a mix of NVC and no pay leave. So when we had to do that, every colleague received their letter detailing exactly what was the cut, what was the NVC cut, and what was the no pay leave. And we explained why we needed to do that. And each time we adjusted, they continued to receive an individual letter. And when these letters were not just given to them, were not just like sent to them, or emailed to them, the respective exco or head of division had to sit one-to-one with each of the colleagues to explain why we needed to do that cut or that no pay leave. We made each exco explain individually to each colleague so that they fully understood that was done as a last resort, and they fully understood and cooperated with the hotel. And when we ceased, eventually when we ceased and was able to restore back the original salaries, we also gave them a letter to tell them your salaries have been restored. And we thanked them and showed our appreciation for their support, throughout this crisis.
Okay, thank you, Jennifer. I'm very conscious of time. Maybe just one last question, if you can oblige. What is one thing that we can all bring back to convince our management to adopt FWS?
As I've said during the presentation, we are now in a recovery mode of COVID-19. There's now business upturn, and in fact, it's the other way around. We are now facing manpower shortages, right? Take this time now when we're not in crisis. If you have not implemented flexible wage system, do it now, because in the middle of a crisis, it's very difficult to negotiate this with your union, and it's very difficult also for the union to agree, because you're right there in the middle of a crisis. Do it now. Work with your head of finance and, your CEOs, and come up with that structure, the formula. Zarina in her presentation has given many good examples. Yeah. We also have, but for purpose of my presentation, I didn't go into too much technical, but actually went into more the practical aspects. So there's no one size fit all, in terms of formula. It has to work for your company. So work that out and quickly negotiate with your union if you're unionized. If not, communicate with colleagues, put it into your letters of appointment, so that they understand that this NVC, could potentially be drawn down, so that, in the event they go and buy a HDB flat or going to buy a car and all that, they know that this part is variable and they do not overcommit, in terms of their credits, Yeah. So that would be my
Right.
my advice to organizations that have not implemented flexible wage system.
That's good advice. Well, anyway, thank you, Ms. Jennifer Tan, and of course, Ms. Zarina Pipadi, for your very insightful sharing. Well, ladies and gentlemen, we have now come to the end of today's session. We hope you've benefited from the speakers sharing. But before we go, we'd like to hear from you about this webinar and how we can improve much further on this. Now, we appreciate if you could just take a minute or two to just share with us your feedback by scanning the QR code on the screen, right? Or clicking on the link provided in the chat box. Right, just give us your feedback. Really appreciate it. Okay, now, so we've come to the end of today's session. We'd like to once again thank Ms. Zarina Pipadi and Ms. Jennifer Tan for their very insightful sharing on FWS. Now, thank you also to all of you for taking the time to join us today. I wish you a good day ahead. My name is James, and I hope to see you again. Bye.